Global share markets dropped again over the past 24 hours, and once again it was about the weak sentiment that is around the world at the moment. Again, we've seen some concerns coming out of the oil producing areas, and once again we've also seen some concerns coming out of Europe. Oil prices have lifted up to around $116 per barrel, and this could cause some problems for the global economic recovery. In addition to this, Greece's credit rating was dropped once again overnight, highlighting some of the risks that still remain out of the European region. One highlight for the night was some takeover action. For those of you who do like the finer goods in life, Moet Hennessy Louis Vuitton has announced a potential takeover of Bulgari, the largest jewellery maker in the world. Both of their share prices did lift over the past 24 hours. The New Zealand dollar has been trading under 74 cents against the US for some days now. And on Tuesday morning, it does start the day trading at 73.60 against the US dollar. The weakness recently is a reflection of some comments about our interest rates and the potential for drops down the track. On Monday morning, Prime Minister John Key took the unusual move for a politician to suggest that a drop in the official cash rate would be beneficial to New Zealand's economic recovery. Of course, we are estimating that we'll see a 50 basis point drop in the official cash rate at the announcement on Thursday. This would likely see a drop in interest rates, but would also see some further weakness in the currency, although we do suspect that these factors have already been weighed into interest rates and currency at the present time. New Zealand lamb schedule prices continue to hold on, and over the past week there has been no change in these levels. While the Easter trade period is starting to come to an end, we aren't forecasting any major drops in schedule prices in the short term. Supplies in New Zealand as well as around the world remain very, very tight. And this was reflected in numbers released last week by Beef and Lamb New Zealand. They have forecasted a further drop in the lamb kill for the current season. And we wouldn't be surprised to see a decrease in these numbers as the season does come to an end. The long-term fundamentals for sheep look pretty good, and they are looking good over the next couple of years. They will also benefit from a small drop we have seen in the currency over the past couple of months. We are forecasting the Kiwi dollar to weaken further against the pound over the next 6 months, but aren't forecasting a major decrease for some time yet. While these small decreases will be beneficial to sheep farmers, they will also see a good amount of supply supporting prices in the long term.